Good day, fellows. My name is Ethan, and I am your finance fellow. If this is your first time listening to the show, welcome. We talk a lot about personal finances. I want to make sure that every single person that listens to this show reaches financial independence. I don't know you from Cain. I have no idea who you are. I don't know your situation, but I know that you can reach financial independence. And I'm going to tell you the tricks and the skills and the ways to get there. And I'm going to try to make it as easy to follow as possible. A lot of these times, these financial gurus or maybe your financial advisor say, oh, we need to start doing this and these complicated strategies and you start this business. Guys, it can be really easy. Follow some simple steps that I'm going to talk about in today's show and make sure that you don't reach the point where you just throw your hands up, put your head in the sand, and just hope it all works out. It won't. It takes a lot of planning. So join me today because this is our second question and answer show. To begin with, question one is from Des. Des is a wonderful lady. I work with her on a lot of occasions. And Des has some questions for me. She said, hey, I want these couple questions answered to make sure that I'm not too late. Guys, too late is a word I don't like to hear. Too late is a word meaning I am about to give up. Never give up. There's always a chance to get everything situated and become financially independent. Des's first question. If I don't have a retirement at 35, what is the first thing I should do? Well, the first thing you should do is not freak out. You have so much time at the age of 35. Yeah, you may have to work a little bit longer. You may not be able to retire early with financial independence, but you may be able to reach 65 and retire comfortably like any other normal American. Okay? Important to understand with what you should do when you reach 35. At this point, if you don't have any retirement saved, or maybe you don't even have any savings saved in your business savings account, you need to make some rash decisions. You've got to figure out a way to cut your spending or to make more income. Now, a couple things you need to do with cutting spending. Humans are really, really interesting creatures, and humans do some really interesting things. If one bad thing happens to you, and say you lose your job, I've lost my job, and I've got a car payment, a house payment, a blah, 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 blah. It may be a better decision just to rip the Band-Aid off. Just say, hey, I lost my job. I don't think I'll be able to find a job for a good replacement income. Let's just start throwing away. Boom, boom, boom. Let's get rid of the car. Let's get rid of this. Let's do this. Let's do this. Get a cheaper car. You need to make these rash decisions quickly. Because if you pull the Band-Aid off, your adjustment to normalcy goes a lot faster than say, hey, I'm going to sell my car right now, wait 2 months, then sell the house. We don't want to do that. You might have to make some really difficult decisions at first, but just ripping the Band-Aid off, doing it all at once will be good. However, you need to understand too that maybe you're not at that position. Maybe it's not that crazy of a level, and you're just like, hey, I haven't started retiring or I haven't started putting any money in retirement, but I'm getting 35 and I want to start putting some money in there. Congratulations, you still have a lot of time. You have 30 years until you reach 65. Maybe you work a little bit longer. Maybe you have 35 years because you're going to work till 70. But you have so much time available to you. And that time is just money growing in the background. That's what we call passive income and the best way possible, capital appreciation. So what's the first thing you need to do? You need to make sure that if your employer offers a 401k match, maybe a 403b match, which is rare, or a pension, understand what you have going into this whole retirement thing. If your employer offers some sort of matching contribution on a retirement account, that's the first thing you need to do. If it's a 4% match, you put 4% in starting today. 4% of your paycheck needs to go into that retirement account. There is no better investment that you could ever make than getting your employer match. If I put money into the market, say I put $100 into the market, I put $100 in, eventually it'll reach $200 over time. If I put $100 in and my employer matches $100, congratulations, you've made $200 instantly, just like that. That's an incredible place to be. So that's the first step. Second step, if you have high interest debt, this is credit card debt, this is debt above 9%, maybe on a car because the interest rates are really high right now, then this is an option for you to say, hey, I'm going to get my employer match, but I'm going to hyper pay down debt. And you need to start making sure and making the question or determining whether you're a credit card person. Some people aren't credit card people. I have a few people I work with in my firm that they have business credit cards and they charge, $25,000 a month, but they pay it off every single month. I consider those people credit card people because they never run a balance. If you are running a balance, you need to make that, pull the band-aid off decision, whether it's the best decision for you just to completely cut out credit cards out of your life. Come back to it later. I love credit cards as a great way to build rewards points and to be secure when shopping online. But you need to be realistic with yourself. You may not be a credit card person. If you are charging more every single month on your credit card than what you're paying in to cover that cost burden or that debt, you need to stop credit cards, okay? So first and foremost, and keep going through this every single time. First and foremost, get your employer match. Second, high interest debt, okay? Third, if you have the option with your income, a Roth IRA is an incredible tool to reach financial independence quickly, because with Roth IRA, you can become a tax-free millionaire. If you want to learn more about becoming a tax-free millionaire, check out one of my previous shows about how you can become a tax-free millionaire. Okay, so that's option 3. Now, option 4, if you have a health savings account availability to you, and that means if you have a high deductible health insurance plan, that a health savings account is an incredible tool for you to get a tax deduction on the front end, get all these additional 4 tax advantages that HSAs have. Once again, in that previous video, discussing how you become a tax-free millionaire. But it's an incredible tool, and it'll help you cover your medical expenses in case some major situation happens, okay? And I just want you to put a little bit of money in there. The Roth IRA and the HSA are kind of in the same plan. Just try to put a little bit of money back. Now, it's important that you also need to make sure that you start saving 3 to 6 months of emergency expenses. Now, the Roth IRA has a special provision, and this provision is a break glass provision. So if I put money into this Roth IRA, if something were to happen, I always have access to my bases. Say I put $1,000 in that Roth IRA, and then 2 years later, I'm like, man, I have no money, and this is some terrible thing has happened. You need to make the decision that, hey, I still have that $1,000 basis in my Roth that I can pull out totally tax and penalty free. So the Roth IRA is a great chance to put money in while still keeping it invested. But it's important to also have that 3 to 6 months of living expenses in some kind of savings account. I would encourage you to look at a high yield savings account. I'm not sponsored by any of these people, but Ally is a fantastic source. Stay away from the highest interest rates on the bankrate.com. You'll see Capital One there, and you'll see some other banks. Capital One, they change their interest rates often. So you go from having a 5% when you first start out, and they drop it constantly. Now you'll eventually be getting 2%. So you just need to be aware of that. Ally always adjusts back up and down based on whatever the market is and the interest rates are. So there's some first 5 things to really focus on. I'll be coming out with videos later on to discuss this more detail about what you start doing when you reach these 5 things. But be realistic with yourself. This is not a switch, just a one-day switch. This is something that's going to take you a month, 2 months, 3 months, maybe even half a year, maybe even a full year to really finally make that decision for a complete adjustment to your lifestyle. But you can do it. It takes time and effort, but I know you can. If you're watching this content, you're already making some of the best decisions you'll ever make, because I want to make sure that you're going to reach financial independence. And I am personally invested in to see you succeed. All right. So, Des, I hope that answered your question. I got a little blabbering there for a little bit, but I think all the information provided you is really good resources. So just for a recap, get the employer match if you have it. Make sure that you are paying off that high interest debt, whether it be credit cards or loans above 9% interest, okay? Take advantage of that Roth IRA or HSA if you have the option, and make sure you save at least 3 to 6 months of money in some kind of savings account for emergency expenses, because inevitably something is going to happen. All right. Now, Des also had a second question. So Des, thank you so much for asking multiple questions. I love when people give me multiple questions, because then I can go from one question to the next and they'll be relatively similar. So Des is asking this question. She said, what is the easiest way for an entrepreneur to avoid paying extra taxes? So a lot of people don't know that I work with on occasion whenever they talk about this video platform I have, but I am an accountant. I have my own accounting practice, and I work with small business owners, and I talk to them about how to save as much money as possible with taxes. There's some incredible advantages to being self-employed when it comes to retirement planning, tax planning, and the like. The first thing I'm going to tell you, if you're an independent contractor, which means you own your own business and it's just you, no employees, you have the world of options available to you for retirement. If you haven't heard of it, a solo 401k is an incredible tool for self-employed individuals with no employees because there's no testing requirement or filing requirement until you reach $250,000 in that account. For some, that may be relatively quick. For others, that takes a while. So first and foremost, if you want to look at more ways to legally hide money from the government, a 401k is a great tool because you get a tax deduction on the front end. The government says, hey, we saw you made this money, but we also saw you put a lot of it into this, 401k. That's okay. We're not going to, we'll tax that later. You can have that, we'll just take away from your income this year. We'll get it later. Incredible place to be because now all of a sudden you have a lot more tax planning opportunities and the government says, hey, we see you made this money, but we can't tax that money right now. Great option for you. Now, the solo 401k has a lot of really complicated stuff that goes into it. Just be prepared that, hey, this is an option. There may be some opportunities to talk to your accountant or financial advisor to figure out what you need to do to make sure that you stay in compliance with that account. So that's one of the options. Another option is make sure that you are using the appropriate deductions. Mileage is a deduction that nobody keeps track of, and I find it to be the most critical and most amazing deduction possible that you have as self-employed. If you use your personal vehicle for business, you can write off the mileage on all the business miles you drive. Now, it's important to understand that you driving from your house to the shop or to the business, whatever it may be, is not deductible. But if you go from the shop, so say you want to go pick up something at Walmart, and then you hit for the shop and drive it back, that is a deductible mileage expense. Keep a mileage log. The things that they're going to want to see if you ever get audited is they're going to see the date, they're going to see the beginning odometer reading, the ending odometer reading, and they're going to want to see a description of what you did on that date. So those four things are really important. So if you're going to take mileage deduction, do that. Now, if you're a sole proprietor / single member LLC and you have no employees, or even if you do have employees, but if you're a sole proprietor or a single member LLC, which is just you're not some corporation status, you may be able to take advantage of the home office deduction. The home office deduction is a quick $1,500 deduction, assuming you have appropriate home office space. What do you need to look at for a home office? First and foremost, it needs to be a location in your house. I'm going to use this room for example. This room is about 10 by 10 feet. Okay, I use this room specifically for business. So if this was my primary residence, I'd say, hey, I got this 10 by 10 room here. So that's 100 square feet, and I get $5 per square foot, up to a limit of $1,500. So home office, I'm gonna write off $500 just by being in this room because I have a home office expense that's related to specifically the business. It's a credible tool. It's only available to those who are not corporations. If you're a sole proprietor and you are being taxed as an S corporation, very different. You cannot take that deduction. Speak to your accountant before you make the rash decision to do this complicated business deduction without any guidance. Okay? And the third thing, take your cell phone bill. If you use your cell phone for business, like me, I use this cell phone for business. I have my phone system run through this. I have my email. I have constant text and phone calls from clients asking me questions or asking about certain things going on in the market or whatever it may be. I use my phone for my business. I always encourage people, write off a portion of your phone bill for whatever portion is yours. For example, if you have 4 phone lines and you use your phone for business, take your business phone line that you're using and then take maybe 50% of that or whatever portion is business related. It's really important to understand. Don't just assume 50%. I throw that number out. Do not just assume random numbers. Have a reason for every single thing that you do, because if the IRS ever comes a knocking, they want to know you had a reason. And at that point, if you're looking at these kind of deductions, you need to speak to an accountant. This is not the point where you say, hey, I think I'm fine. I'll look at TurboTax and do my taxes myself. Do not do that. If you're looking for these deductions, you need an accountant. Try to go and talk to enrolled agents or CPAs. Enrolled agents are a little bit cheaper and a little bit better for really small businesses that maybe don't have a whole lot going on. CPAs are much better for more broad financial topics and questions. Okay, so just look for that. So I think that pretty much sums up a few things to look at for entrepreneurs to avoid taxes. Just make sure you know what deductions are available to you. And if you have the option, take advantage of those self-employed retirement accounts that have a great way just to hide money from the government and just keep deferring that every single year until you reach retirement, which opens up more planning opportunities. So thanks so much for listening, everybody. Well, really, really excited for the future of this show and what we can expect. If you want to watch the video version, which there's not a whole lot going on, just sit in front of a camera. But if you want to watch the video version, we do have a YouTube channel. If you love listening to podcasts, great. We are on some of the biggest podcasting platforms called the Finance Fellows. And we're just there to get you in any way possible so that you can listen to this show whichever way you want and it is most beneficial to you. So if you're new, thanks so much for staying through the whole show. Like, subscribe, comment, do the whole ring the bell and what else did they say for podcasts? Follow and share with your friends, right? I want everybody to know about this because I'm so invested to make sure that every single person that watches this show reaches financial independence. I want to make sure that you reach financial independence. No matter what it takes, I'll be here with you every step of the way. And I'm going to keep releasing videos with your questions on how to get there. So guys, if you have the option, write me a little question down there in whatever show format you're looking at, and I'll see if I can get to it. Thanks so much. Hey there, guys. Thanks so much for watching the video or listening to the show. I want to make some clarifying points. First and foremost, I am a professional, and I do have a legal obligation to make sure that you get information and use it the best way possible. However, this show is just for general information purposes. Everything that you have going on in your finances, everything you have going on in your life is so specialized. Do not take the information that I provide in my videos as investment advice. Talk to a financial advisor, speak to an accountant so that you know what's going on with your taxes and your retirement. Everything I say in this video is for informational purposes only.